Metropole TVKE across all your social media platforms. 20146 is your SMS line. Let's look into whether Kenya needs a new tax policy. Now, the Institute of Certified Public Accountants of Kenya, ICPAK, has called on the government to formulate a comprehensive tax policy to guide its revenue collection efforts. Speaking during a pre-budget hearing organized by the Institute of Economic Affairs, IEA, Elias Wahiksi, the manager for policy and research at ICPAK, said Kenya needs a new tax policy that will enhance tax collection given the widening budget deficit facing the government. Now, through the policy, Elias argues that the government will have effective tax systems, narrow the revenue gap and create predictable tax regimes that are favorable for local business and foreign investment in the country. Now, the accountants' body comments come against the backdrop of the projected 937.6 billion shillings budget deficit in the 2021-2022 financial year. Now, the projected deficit in the proposed 3 trillion shillings budget will be financed through domestic and foreign borrowing. Now, the National Treasury has also indicated that the revenue collected during the first half of the current 2020-2021 fiscal year declined by 14% compared to a growth of 17.1% over the same period in 2019-2020. Now, the decline has been blamed on the difficult operating environment brought about by the COVID-19 pandemic, which has adversely affected revenue performance since March 2020. Fine. That is the backdrop. Now, to help us understand further on whether Kenya really needs a new tax policy, we do have Caleb MOKAYA. He's a partner at SKM Africa. Caleb, how are you doing?
Very well, Simba.
What are we talking about this, though? Why is ICPAK telling us that we need a new tax policy in light of the budget deficit that we have and the continued budget misses or collection misses, for the taxman? Do we need a new tax policy on that note?
Well, perhaps I think I'll try to phrase the question differently.
Yes.
Do we have a tax policy in the first place? And I'm persuaded to believe that we don't have a tax policy.
Yes.
Because I've not come across one as a tax expert. And a tax policy is very important because it informs the fiscal measures that the government has put in place or intends to put in place in the medium term to the long term. And of course, it's very key in terms of directing both local investment and foreign investment. In cases where there is no proper tax policy in place, you normally see haphazard sort of tax regimes and tax more or less of proposals. And I'll give you an example. In the past 2 years, we have seen quite a number of tax changes that have been extremely, that have had a lot of effect to the economy. For instance, from an income tax perspective, we have seen the more or less of repeal of the entire capital allowance schedule and introduction of a new tax allowance schedule. We have also seen a couple of changes regarding the introduction of minimum tax, for example, which is taking effect from this year, January. We have seen introduction of DST, which is digital service tax, and all these are, no one expected them. And for someone who is keen in investing, whether a local investor or a foreign investor, they need some level of certainty, some level of predictability of the tax environment or the tax regime. So when there is no tax policy in place, then it really becomes quite difficult for the investor to make such decisions. And for those who have made such decisions, then they even consider exit because they are not sure how stable this part of the world is as far as investment is concerned because of its, the volatile tax environment. Secondly, I think our national budget is growing to 3 trillion. And in the wake of a pandemic, when the effects of a pandemic are manifesting now more than even last year, then the question is, are we ready for a higher budget than even last year? And considering the fact that the government is going to look internally, that is in the local market, to mobilize, I think, 1.7 trillion, and the difference from borrowing. So we do need a tax policy for sure. I don't think we have one in place at the moment, but there is need to have a proper, well structured and well-framed tax policy that can inform the tax regime and the fiscal measures that the government has in place. And this is going to be for the benefit of all of us, especially for the government in mobilizing revenue.
Pretty much. All right. Now, Caleb, let me just take you back to exactly where ICPAK is coming from. When they're saying that we need a new tax policy in light of the misses that we've seen come from Kerry, what do they mean? Do they mean that we need to tax the economy more? Because that's exactly what they're saying. Or the efficacy that they're saying in the current regime that we're running under. Because that's exactly what they're saying, that because we don't have it, that's what we're missing. But the general sentiment is that we're already overtaxed. Are we introducing a tax policy that's going to overtax us? What efficacy are they introducing?
I think, of course, it's alarming to every concerned Kenyan on our tax, on our budget deficits.
Yes.
Because essentially what that means is we have to look outside for borrowing. And of course, we are almost hitting the debt ceiling that Parliament set for us.
Yes.
I think we are already at 7-point-something trillion in terms of external borrowing. And our target, our limit is around 8 trillion thereabouts. Now, what essentially the Institute is saying is, look, is there a way that we can have more of an efficient tax regime that facilitates tax mobilization? That is revenue mobilization for the government through KRA. And I do believe that their sentiments are very much well in order, because to the extent that not so many of us are in the tax bracket, then the government will keep on missing its revenue targets. So if we have a tax policy that ensures that each and every taxpayer who has income pays their equitable share of revenue or equitable share of tax, then it means that we will not have, big tax deficits, or rather revenue deficits, and that then informs the conversation of how much then do we borrow, because we are able to collect as much as we could from the local market.
Yes.
And I think that is a conversation which is way overdue, because the moment we keep on just focusing on the low-hanging fruits, pay as you earn, because it's easy to administer and to collect from employees. Corporation tax, because corporates are either we have to pay, and they're in the radar of the Revenue Authority. But we are forgetting some key segments of the economy which might not be really earning as much, but they can contribute something to the basket. Then I think it's good to have that conversation. And a load shared by many becomes lighter than when it's shared by few. So a tax policy that entrenches such a mechanism of taxing as many as possible then could mean that we'll increase our revenue mobilization.
Yes. Another question that is going to become pertinent in that, Caleb, is that, okay, let's talk about the way in which we approach our financial years. I mean, every time we approach a financial year, then you do expect that there are a couple of changes that we do expect in our tax collection. I mean, that is a talking point every time we start each financial year, and we're going to see more getting introduced again in 2021, 2022 once we start it. For you, when you see these tax changes, the new introductions now as well, is it possible to have a tax policy that is static, that is sort of comprehensive, that will not necessarily mean that we're going to change the way in which it tax the various sectors and industries in the economy to see us for the foreseeable future? Or it's proper now that we look at the various ways in which the economy is performing before we come up with a tax regime to run us in a financial year? Because that's exactly what ICPAK is saying, is that, well, it doesn't work, so you gotta make it more effective.
Thanks, Simba. I think a tax policy, or basically tax across the world, is dynamic.
Yes.
Because as you could appreciate, even the way business is done has been changing for the last 10 years.
Yes.
We are now seeing more services and goods being provided in a digital market platform, moving from the conventional way of doing business, which essentially means that the authority and the revenue authorities across the world also have to move, or rather get into speed with how fast the business is changing, so that they're able to as well correct revenue.
Yes.
Now, that said, even though a tax policy has to be dynamic and has to more or less change with the economic circumstances of the world and the economy and the local economy, there has to be some level of certainty and some level of predictability.
Yes.
Because those two tenets of taxation, they do inform what we call a stable fiscal environment that attracts investment from both locally and internationally. So it's a tricky balance, and for example, what we have seen the government do is what you've mentioned is part of what they have introduced is minimum tax and digital service tax.
Yes.
And the whole idea is to try and see how can these two taxes try to ensure that there is more revenue mobilized from the economy, and tax is a necessary evil that all of us have to contribute. So if the tax policy is one that is going to ensure that we contribute as much, or rather we raise as much revenue as possible from the local economy, that is good. And we ensure that everyone gets to pay tax, that is even better.
Yes.
But that said, there has to be some balance of ensuring that this policy has some element of certainty and predictability.
Yes. Interesting that you should be mentioning that. And then somebody says, well, that your economy has to develop to a certain level for you to start saying a working policy. Could the argument for the government be that even our tax regime is a developing entity, that we aren't sure yet? Is when we're trying to bring more people into the bracket before we can actually give you a definite policy. Could that be the argument around why ICPAK fails? Well, we don't have a policy. We need to get a proper one.
Well, of course, when you compare ourselves with the rest of the world, especially the first world countries, we are definitely a developing country, and what that means is every bit of our, every aspect of our economy is developing, including our systems, our institutions, our revenue mobilization structures, and of course our policies, which point into revenue collection.
Yes.
But even with that being the point and the fact, we need to make fast strides. In Africa, perhaps Kenya, in terms of technology, in terms of development, I think we are top 5.
Yes.
And then perhaps the question is, how fast does Kenya needs to move so that they adopt what we call best practices that have been adopted by countries which mobilize revenue pretty well. For example, the UK,
yes,
the Inland Revenue, the US, the Inland Revenue Service does a pretty good job. IHRMC of UK does a pretty good job in terms of revenue mobilization. So it's really benchmarking with the best and ensuring, of course, and customizing it based on our local circumstances.
Yes. Well, we do know the tax man is the one who gives us all the revenue, and from time to time, we do exactly see what they're implementing just to help them collect this revenue, Caleb. The question is it that we have failed to know who is supposed to pay this tax? Is it the failure of KRA to get this tax that sort of makes us look around and say, well, maybe we don't have a tax policy? Because every year we give them visible targets. What you're saying, it's predictable, has to be certain. Every time Treasury sits, and we do know right now in 2021, 2022, they'll be given 1.9 T to collect from in terms of ordinary revenue. That is something that they look at and say, well, with what we have in place, we can collect it. And it's a projection, and it comes from somewhere. Is it the failure of Kenya Revenue Authority to get this money, or is the failure of us having a proper tax policy?
Well, we have unique challenges as a country,
isn't it?
Yes, we do.
Yes.
If you look at our economy, a big chunk of it is informal.
Yes.
And taxation of the informal sector has been one that has been very difficult.
And that's where the conversation begins in terms of that policy, isn't it?
Yes.
Yes.
A policy that ensures that, everyone gets to pay their fair share of tax.
Yes.
And every man gets to contribute to, tax is an evil duty. It's a necessary evil, in the sense that we all need services from the government. We need security, we need schooling, we need Medicare services.
Yes.
And all these are only possible if the government has revenue. So the question is then, how does this tax policy that, in my view, we need to develop respond to the challenges that we have seen in the past of mobilizing revenue from some sectors? For instance, the informal sector,
yes,
which, Simba, you know better that it employs majority of Kenyans.
yes.
Yes.
All right. Now, another area that is a conversation point, and I wanted to have your 2 cents on that, is on exactly what we've seen introduced again by the taxman this year as well, the minimum tax. Your 2 cents on that. Do you think that that's what we need to head in terms of them getting closer to hitting their targets?
For the taxman, I think it's a good move,
yes,
because the target is entities which are making losses.
Yes.
And the argument is there has to be some fairness and some level of equity in the corporate level. That even if you're not generating profits, then you need to contribute a bare minimum to the state, which is of course ensuring that you have this conducive environment for you to run business. Now the question is the timing correct? In my view, the timing is wrong. The idea is noble. The proposal, or right now the introduction, is noble.
Yes.
But in my view, I felt it should have been shelved for a while, so that at least corporates and businesses are allowed to emerge out of this situation that they are in.
Yes.
Because of COVID.
Yes.
Because the effects of COVID are manifesting now. And it's going to take at least 1 year to 2 years for businesses to get back to where they were before COVID. Now, that being the case, then you are likely to see most businesses plunge into losses. And of course, now once you're in losses, unlike before where you didn't have tax to pay, income tax to pay,
yes,
now you'll be required to pay minimum tax of 1% of your top line. So which essentially means that if your cash flow position and your liquidity is off, then you are likely to shut down.
Pretty much. All right, just as we clear this one, digital services tax that now encompasses even the untaxable part of the economy, that's a good way for them. And what do you think the difficulty is going to be around that area?
I think it's a noble introduction.
Yes.
It's the same way we have been trying to tax the informal sector. This is one way we are trying to tax the digital space.
Yes.
And as I've mentioned earlier, we have seen more or less of a paradigm shift from the conventional way of doing business to digital space.
Yes.
We are seeing influencers. We are seeing guys who basically earn their income from the digital space. But those particular taxpayers, very few of them are declaring that income and paying tax on that income. So this move is intended to ensure that every taxpayer, especially those that accrue or drive income from the digital space, get to pay tax. Number two, we have international players in this space, who accrue a lot of revenue from the digital space.
Yes.
And talk about Facebook, talk about Netflix, talk about all these guys who we pay for streaming, for downloading, for listening to music, for watching movies, for putting stuff on advertisement services. So all these guys are required under the digital service tax regime to pay digital service tax, which now is going to ensure that there is more revenue mobilized from that sector.
Yes.
And it's a big plus for KRA. Well, we are not unique. This is not a unique tax to Kenya. Already France, already a couple of other countries have already adopted and implemented DST, digital service tax. So it's a plus for me. I think the Revenue Authority on this one got it right. Perhaps there have been regulations. There has been some level of confusion on the application of digital service tax. I think there is more that needs to be done in terms of sensitization so that people get to appreciate that DST does not mean double taxation. Because there is always some level of argument that does it mean that if I'm deducted withholding tax, then I need to account for digital service tax?
Yes.
And indeed, really, if your income has been deducted withholding tax, then there is no DST applicable on it. So it's really a question of there being more information out there. Already KRA has issued regulations. They are doing a fantastic job in terms of trying to push out information, clarifying the application of DST, but they need to do more so that people appreciate it and they embrace it.
Pretty much. All right, this morning we were joined by MOKAYA, who's really going about the basics of why Kenya needs a new tax policy towards certain certainty and proper predictability in that tax policy. That's exactly what he puts it back to, taking back to the time that he came to the studio on YouTube at Metropole TVKE, across all your social media platforms. And that's exactly what we have for you this morning. Good morning.